part did the failure of Lehman Brothers play in the credit market meltdown? And in hindsight, should the government have bailed them out or rescued them?
You know, they told me I was coming to speak to some nuns about economics. I didn't expect anything like that. You know, from what I understand, you know, Lehman could have been bailed out as easily as some of the others were bailed out. And why wasn't Bear Stearns bailed out? Why wasn't Lehman Brothers bailed out? Or why were other banks saved? I hate to think it was just who knew who and who had their buddies on which board. I mean, I just don't want to get that negative on the whole thing. The role that they played, well, they were just one of the huge players who got caught. And a lot of people don't really understand, well, what happened? Well, what happened? Well, the best way to explain what happened to all these guys is they were lending $1 million on a house that was only worth $900,000. And eventually someone said, call. And everyone went, well, you know, and everyone started looking around. And now Lehman Brothers held a lot of this paper. Lehman Brothers had a lot of hedge funds under them. This mortgage paper was AAA rated. It was in your retirement house, the safest thing you could own. People wanted that stuff. It was backed by houses. That's safe, good things. I want that for my retirement. And all of a sudden you find out it's not AAA, it's B. And these rating agencies put a rating on it, and that rating is really important. There are funds that a lot of you are probably in that are only allowed to buy AAA rated paper. It's got to be rated, it's got to be good stuff, or we're not allowed to buy it. Well, what happens when the rating agency comes back and says, oh, that's not A. That's not good enough to be A anymore, it's B. Well, what do you do if you're the guy who owns $100 million of it and you're not allowed to own it? It's by rules, you're not allowed to own that anymore. It's deemed not safe enough. Okay, I'll sell it. Guess what? No one wants to buy it. All of a sudden, everyone at the same time knows that you're holding something that's garbage. And it's not a friendly place, Wall Street. It's not, oh, I'll help you out, buddy. That's not how it works. You thought you were buying diamonds, now you find out it's ice and it's melting and you want me to buy it? I'm not buying it. And they got stuck. And it's really not that complicated of a problem. What happened? And like so many problems, you just can't believe the scope and the magnitude. But I remember back in 2003 watching The Sopranos. And anybody watch that show? It's funny how okay, well, on The Sopranos, they said, look, I'm going to build this house for $400,000. You give me a loan for $1 million. We're going to go and then we'll walk. And then the banks get stuck. And they basically showed how to run the whole scam on the bank right there on the show. It's real simple. You build me a house. You tell them you build it for $400,000. I buy it from you for $800,000. You know I have a profit. I borrowed all $800 from the bank. You give me $100,000 of your profit that you made, and I go back to the bank and go, whoops, sorry. And now the bank becomes a housing owner of a house. And that's all that happened. It's not complicated. Multiply that though by 100 million. Multiply that by millions and millions, and that's what happened. I mean, it's not, and the guys who made all the money said, wait, how can houses go up 10% a year if incomes are only going up 2% a year? It's not complicated. You know, thinking is allowed. Economics is always logical. If it's not logical, then you don't understand. You're missing something.